Okay, folks, welcome back. All right, so I'm going to try to get through this one as quickly as I possibly can. I've tried to stay quiet as much as I possibly could this entire week. I have another video I got to do for the charter members, so I'm going to try to rest my voice between making this one and the one I have to post for them tonight. So I appreciate those members that are charter level. They're granting me the extra time to get that done for them. But it will be delivered today. I had to have the leap day. That's extra day for February. Usually there's only 28 days in February. The 29th today. The Lord has granted me one extra day to get it done. So I'll have it on there. It'll probably be very late tonight, but it'll be on there before midnight my time. All right, so here's our economic calendar. I'm not going to jawbone about that. I'm going to try to preserve my voice. Just be mindful that we do have a lot of high impact news this week, and we're waiting to see if there's anything new on the development of the COVID-19 or coronavirus. Real quick also, I'm not going to promise that I'm going to be able to get every call for throat clearing out of this video. I don't have the time to get it done. So normally I spend a lot of time editing any kind of noises or things that would otherwise be a distraction. So I appreciate you just putting up with it. So here we have the dollar index. This is our daily chart. You can see that while we are noting two specific SIBIs in here, I have this one here and this one here from the review I gave on Wednesday, which was silent. I'm getting emails asking where's the audio on it. It's silent. The first SIBI in here didn't offer any kind of support or resistance in here. The order block neither offered support or resistance either, so that was a rather moot point. Price did in fact trade back down into this SIBI, and I had a level on the order block that starts the two daily close, down close candles rather. And the only thing I've changed here is highlighted the last down close candle from its open to its high. That's being shown here. Okay, I'm doing it just for the sake of what you would do after the fact to more or less document your charts for your journals. Now everyone knows what the order block theory is in terms of the last down close candle. That's the most sensitive one. If it's a series of candles, then you have to take the entire candle series as the entire order block, and then you do the high, the open, and the mean threshold. And depending on what market structure is in play, you'll use one level over the other, and you learn that eventually in the mentorship. All right, so what I'm looking at is the likelihood of us coming all the way back down in here to a really deep retracement. We rebalance this BISI in here, so buy side imbalance, sell side inefficiency, back into an order block. So I want to see if there's an absence of any new horror stories for the U.S. on the COVID-19 and or coronavirus. I'm going to keep calling it coronavirus. I know they're trying to transition away from that, but everyone knows it by corona. So if there isn't any real major surge on the infections or more people getting sick, or God forbid anyone passing away from it, then we could possibly see it bounce. Now, if it does bounce, then this SIBI will become more significant, which also overlaps with the SIBI here. You see that? So we had this initial SIBI, this SIBI, and this used to be a bullish order block. That was what we were looking for. So it could trade back up to that point here, and then if there's a horror story that comes in for this week, that may be a catalyst for a 98.80, 98.85 level short, and that could more or less move dollar lower, and that could end up taking us into contention for this low here. I'm going to talk with no real absolute side because I don't know. I'm actively studying the the news that's coming in and what's being reported overseas as it relates to this virus, because that's it. I mean, everyone else needs to be focusing, well, not everyone else, but everyone else is focused on like the elections and such, and they're trying to say it's Bernie Sanders that's causing all this stuff. Bernie Sanders is not causing any of this stuff. Okay, this is an engineered demolition, and I've mentioned many times over the years the stepping stones that leads to these type of things. And I hinted at recently that they would most likely be a swan event, and that's what we have here in the form of this virus. Now, whether or not this virus goes around and starts killing people, like Captain Trips in the book The Stand, that remains to be seen. I mean, 2,000 people, I don't believe that's the only number of people that's been lost. I think it's a significantly higher number. They're not going to let everyone know exactly what it is until it's so obvious that no one can more or less discount it. It's staring everyone in the face. The largest loss of life is still in China, but it's being reported that Italy is on track to probably surge past that. I don't believe that's the case. I think there's a huge amount of people that lost their life in China, and that's my personal belief. I don't have any hard data to suggest that. I just know that China's done a whole lot to try to cover it up. And one of the other things I've been monitoring is there's really an absence of any kind of children. Like, if you see any footage coming out of China, I saw one video where it shows a child apparently had passed away, and they put another deceased child in the same body bag, and it sounds horrible. I'm just telling you that that's what I looked at. And apart from that, I haven't seen any other footage, not in any capacity whatsoever. No children appear in these videos. For whatever reason, they're not there. So to me, I think that's noteworthy. I don't know what to do with that information yet, but if you think of anything, it might stir up my curiosity or take my attention to some more information that might lead to an epiphany about it. You can shoot it to me through Twitter. The effects of this virus and whether or not it's going to have a major impact on the supply chain and what that supply chain disruption would mean for the U.S. I think that's the point, and what I've been trying to focus with everyone in the mentorship and even on Twitter, that they should get extra stuff, because eventually people are going to get so scared whether this thing does it or not that they're going to be without food, without drink, without medicine, without whatever creature comforts that they're used to having. So if human nature being what it typically is, and it tends to show itself in the ugliest of times, they're going to go out and hoard everything, and that's going to cause disruptions. Okay, so it's almost like a self-fulfilling prophecy. So that's the only thing I've been trying to foster in everyone's motivation, just to get prepared. I'm not saying you're all going to get coronavirus and die. God forbid anything like that happens. What I am suggesting is that this could potentially spin out of control. I mentioned in 2016, before Trump even got elected, that we would see Wild Wild West type scenario and science fiction stuff, like things that you wouldn't expect to see. And I'm not trying to play Nostradamus. Truth be told, I'm just lining up everything on the geopolitical horizon with scripture. And I don't know, there's a lot of people in here that aren't Christian, and I'm not preaching to anybody, but I'm just answering questions, so that way I don't have to answer it again multiple times. I have members that are asking questions. What am I reading? What am I looking at? I'm looking at all the things, okay? But mainly I'm putting the Bible and Jesus Christ in the center of it, because everything becomes really clear when you do that. Whether you want to believe it or not, I'm not arguing with you in regards to that, but that's what I do. So it's unclear at this point if we are going to see a surge in anything over the weekend. It's too early. It's rather early on Saturday today, at the time of this recording. So it's not out of the question to see something happen, okay, on Sunday, which is kind of like what I anticipate. If anything bad's going to happen, it's going to be on Sunday, because they'll want to do that right before all the exchanges open up and starts the new financial week. Now, if nothing happens, then I think that we'll see a bounce on the dollar. All right, so looking at the hourly chart for the dollar index, and there's not a whole lot to say on this. I just want to draw some notes for you to have for your own journal. They have the weekly start of the trading here. I wanted to see it try to get up here and clear some of this up and rebalance this in here. And we had ran out the sell side liquidity, as I mentioned in the previous week's commentary videos. We did that, and I felt it was likely to see it pop up in here. What it would do from that point, who knows? But it didn't even do that. All it did was rebalance this point and broke down. The SIBI in here, we did offer a level of resistance in the form of a bearish order block that was coupled with a fair value gap. Now, again, for you new folks that come in here wanting to find out the secret to order block theory, one of the things you want to have in your notes, the highest probability order blocks are going to be in association with an imbalance. Okay, so it has to be up close candle, one single candle down, and that's a fair value gap. And then you see it price returns back to it here, and then you can sell short at that, and the stop loss would be above the order block. Okay, and that would be a means of using a bearish order block, and you would reverse everything for a bullish order block. Now, there's a lot more theory that goes along with order block and breakers and such that I haven't covered yet, even in the mentorship. So just know that I know there's a lot of you that just came in wanting to know that. That's the secret recipe for order block. It's not every down close candle is a bullish order block that you buy when it hits it. Okay, there's one facet that has to be there for me to really like it and trust it, and it's that. Okay, so again, you can see clearly that's not supply and demand. So price does in fact go down, trades into the other SIBI, and this is the order block, the last down close candle on the daily chart. It's open to high, and you can see that shaded light blue area, and this is the bottom of that lower level SIBI, and this is the top of that lower level SIBI, and this is the higher one. I said on the daily chart we didn't see much of a resistance or support. This is what we see near it. Okay, so in close proximity to these things, because this high, if we were to do a more or less a survey, if we were all in the same room and said, hey, okay, what's your high on this particular candle here? Invariably, everyone's going to have a slightly higher high or lower high. It's going to be different. And it may have gone a little bit higher and touched this SIBI on your price feed, or it may not have gone as high as it did here. That's why we have to use the approach of, I factor in 5 pips. I fluff up the numbers I see on data with that much variance. So what that means is sometimes I may enter well before the order block even gets traded to. And if you really study some of my videos I've shared where I'm doing trading, I'm doing a lot of that many times, because otherwise it would look different. Like, why is he trading there? What's so special about that? What they're not understanding, and if you're thinking that when you're watching me do these recorded trades, I'm factoring in a measure of 5 pips or so ahead of a level I'm looking for. So I'm willing to absorb 5 more pips and then whatever normal drawdown would be on the trade. That's why I said people that have this idea that they're always going to be able to trade with less than 10 pips on a stop, that's a pipe dream. That's never going to happen. Not consistently, it won't. Because the variation of delivery on what your broker is going to do and what the interbank feed is, because that feed is coming directly from the central bank, it gets spliced up and it's offered in pieces, and you're not getting every actual price that's coming directly into the top tier banks. You're not. So when you sign up for these trading accounts, you're actually not reading it, because no one ever reads it, but you're actually agreeing to them being able to do that, and that's their spread. And within reason, they can make that spread whatever they want it to be. In the beginning, when Forex became available, it was bucket shops that would do crazy stuff and open up the spreads just horrendously. And that's before they started getting regulated, but nonetheless. If we go over to the 15-minute time frame, you can see that I'm only highlighting the levels that would otherwise mean the lower end of a fair value gap, and I'll show you what I mean by that. Right here, we have a fair value gap right there, and we have a fair value gap here. So this line is the top of this candle right there, and this line is the top of this candle. So what I'm referencing is the low level or low end of the fair value gap that would only be required to use the institutional order flow entry drill technique that we teach in the commentaries. So that way when you can practice and look at what order flow is likely to do, this is what you're trying to do every single day. You're looking for one of these to occur either on a 5 or 15-minute time frame. And if you're able to do it on a higher time frame, hourly, 4 hour, and daily, then obviously you can do that too. But just know that that's what I'm highlighting here. I don't want to put another line here because it creates too much confusion, as you saw when I went down to the lower time frame here. It just would have been more lines than I like to have on my chart. So we can see we went up in here, it had the institutional order flow entry drilled here, here, and then we had it here. And then this is a return back to the same level right in here. So it's acting like a reclaimed order block. And you can see the price shows a willingness to want to go lower. We have immediate rebalance on this candle here, and that's taught in commentaries for those that are new. Then we have a fair value gap as well here, and price runs above that here, and any buy side liquidity that will be resting above the short-term high. The eyeball here is just a reminder that when we go into the euro and cable, and I do talk about the Aussie dollar because I gave you a study on Twitter that I will review in this video. Just be mindful that this level here is a sharp sell-off for the dollar. So anything bullish, keyword there, bullish, is going to have a real strong tendency to go higher on this sell-off, going down into the lower level of that SIBI on the daily chart and then into the order block. So this move here, you want to study that on your own charts and compare that with the other dollar crosses. All right, so this is the portion where I want to go into. I almost didn't want to include it because I know I'm going to talk more than I should, but this isn't the only time I'm going to talk about it. I just wanted to say it now because we have a nice surge of new members come in, and they just saw some goober tweet something to me, and they think that this is Wyckoff that they're learning. This is not Wyckoff, okay? I'm going to try to settle this, as short as I possibly can in regards to, am I teaching or am I trading or am I relabeling or repackaging or twisting the narrative of Wyckoff theory? Trust me when I tell you this, okay? If you look at Wyckoff, you'll see that what I'm teaching, Wyckoff is first grade compared to this, okay? It's not arrogance, it's fact. When you look at all of the schematics that these supposed Wyckoff theorists use, and any of the things that Wyckoff presented, they are just generic. They're very, very generic. There's nothing, it's always a squiggly line. It's always this, it's that. Nothing ever really matters in terms of, what takes place in these areas of accumulation or distribution. The only thing that is readily identified and recognized is the fact that there is some movement from a consolidation that runs up and is met with some kind of a rejection and it sells off. But that sell-off is never noted to go below the original consolidation. Okay, right away, that's your dead giveaway that I'm not teaching Wyckoff. Okay, because my market maker buy and sell models, that's what it's focusing on. That whole price run, the market makers, they set that initial consolidation up. They send price higher, not because of buying. See, Wyckoff talks about volume. Okay, it uses trend lines. It looks at all these other things, okay, to justify what it's likely to do. And that's why it never caught fire. Because if it was what I'm teaching, it would have been mainstream. And as I teach more and more people become aware of me and what I'm doing, you can look at people that are talking about the markets and right away, you can hear my terms, the things that I say, and you can hear them stumble over their words right before they talk about what would otherwise be said as an order block or a breaker. They're always trying to come up with some other name for it because they don't want to sound like me, even though my fingerprints are all over what they're doing. So I want you to look at this chart here. Okay, this is our daily on the euro dollar. And right away, I want to know, and right away, before we get into it, I want you to understand that, yes, I did not call this move here, not in last week's recording, and I didn't call it in the midweek review where I had the charts and commenting. What I was looking at is I wanted to see if this order block was going to hold price down. Now, I didn't say it couldn't go higher. I didn't say anything except for I want to see if this allows it to go lower. If it holds it back, keeps it from rallying. Now, why did I do that? Why was I worried about this particular order block? And it's going to make a whole lot of sense to you now because the folks that have been through the mentorship, they'll remember these discussions and then the further amplification I'm going to give here now. So in reality, I'm actually giving you a charter level lesson that charter members haven't even received yet. And I want you to know, coming in the door for all you new folks, okay, or if the folks that have been here for a couple months, Paul, you'll get who I'm talking about. This is not Wyckoff, okay? And to be on social media pretending like you figured this out and saying that I'm just teaching Wyckoff, you're full of it, okay? Just be careful because what you're saying is nonsense. So this is our daily chart. And if you know that we have been looking at the higher time frame weekly chart, I'd mentioned that there was something down here that if you go back and watch the recordings, and it'll pop up in the chart in a second, that was a level we were targeting. And it got so close to it, it was only like not even, 3 pipettes it was? I think it was 3 pipettes. And it never went down to the actual level I wanted to see it trade to. Okay, so which was 1.07776. Okay, and it didn't get down there. It was only down there by or like 2 pips or 2 pipettes or 3 pipettes. So it wasn't even a half a pip. That's how much I was off using the weekly chart. Now, in addition to what I'm about to talk about, I want you to understand that my main focus, because all of you are new, even the charter members, in my eyes, you're new. Okay, so trying to trade long-term potential reversals or try to pick bottoms and tops, I try to avoid enticing you to do that. There's trades that you'll learn that are high probability reversal trades, and then there's highly speculative. That means higher risk. But if you're right, you get these types of reactions here, okay? But they will come towards the end of my teaching of the content, which will end essentially in December of 2022. That's my scheduled end to all the lessons, quote unquote, and then we'll just be doing reviews and just commentary. Okay, so that gives you an idea how much time you have to complete everything. Now, new people, that doesn't mean rush to get caught up. Take your time. There's no reason to rush through any of this stuff. But this daily chart here, if you look at what we have here now, this is our weekly levels. And I'm going to counsel you to go back through the old recordings to know what these are. I'm not going to go over that now. But this reaction here to here, I want you to think about all the framework that I'm going to outline between these two price moves here to here. You don't see this in Wyckoff. You don't see it in my market maker teachings either. One facet you do, which is when we look at the market coming down into a level as a target, that target may complete the run, consolidate, and then resume, or altogether reverse. We never know that is going to be one way or the other. Okay, that part you never know, because the long-term higher time frame charts tend to stay in motion for a long time. It takes a lot for them to change gears. I'm of the opinion, because of this virus and all of the things that go along with it, that was what instituted this large, extrapolated move on the upside. When we look at price moving lower and it's reaching for a target, whatever that terminus is that I'm outlining, if it's a move that's been going down, okay, your mindset is, okay, at that target, we need to start looking for or studying if there's going to be a market maker buy model. Okay, it's not look for a Wyckoff accumulation markup phase. Okay, that's not what this is. This is an area where it could resume going lower after consolidation, or smash right on through, or reverse. This up close candle and this up close candle are the only up close candles in this parent price swing. The parent price swing I'm looking at is from this high to this low. So this is our dealing range on the daily chart. This is what we're working with. What makes it a dealing range is because it has swing high, price move lower, displacement, and now we have movement higher. So this is the parent price swing at a level I was already drawing everyone's attention to for months, not a couple days, for months. We were looking for this to get down here. When we look at market maker buy models, you want to look at the up close candles to the left of the lowest low. This is going to be, if that the lowest low, you draw an imaginary line up, or real line if you put it on your charts. That line delineates the curve. Okay, the curve to the left is the sell side of the curve. That means all of the sell side delivery has been offered. On the right side of that line will be the buy side of the curve. What you want to do is the up close candles, and if it's a series of up close candles that are in succession, then you'd use them as a complete whole, not just the individual candles. Okay, and you want to take those and extend them out in time through the lowest low and keep projecting them out in time. The market will find sensitivity at these up close candles in the form of mitigation. So what was seen here as buying from a retail standpoint is actually selling short. Smart money sold short in the up move, and the market went lower. Market rallied up again, had an up close candle, even though it came off its high, they sold short again and went lower and into the level that we were looking for, off by 2 or 3 pipettes. Then we had price rally up. These levels in here, okay, this is not Wyckoff. The fact that I use the up close candles and project them through the curve or the lowest low, that is not Wyckoff. Okay, Wyckoff will talk about this down here being a jump the creek after a spring, and then accumulation, reaccumulation, and then distribution, and then break the ice, and then go all this other stuff. And I had to look this up to make sure I said that right, because I don't know Wyckoff like that. And as a history lesson, I was watching a Larry Williams video, and it was the Futures Millionaires Confidential Trading Course video. And he was going over a commodity, and as he was talking over on his overhead projector that was projecting behind him in his presentation, he had a chart on, and the structure on that chart made so much sense. And he wasn't talking about it, like he wasn't teaching like market maker buy and sell models, but when I saw him talking about price, something inside me registered as that's what these upswings look like, and then what they look like when they break down. Now again, I'm going to counsel you it's a weekend project, okay, you want to take a look at Wyckoff. Just pick up a book or something, or go on the internet and research it. Do it for a couple weekends in a row, and you'll see what I'm teaching you is nothing like that. That is so elementary compared to this. What I'm showing you here is the actual levels, whereas the schematics for Wyckoff, it's ambiguous. It's whatever you want it to be, and it's always going to be clear after the fact. My concepts are always discernible. They're predictable. We know exactly what levels we're looking for. I know how to calibrate my levels, and I've taught you how to calibrate yours. There's nothing ambiguous about what I'm teaching you. That's what makes my content superior to everything else out there. There's nothing like this, because this is the market. This is the market. This is how I can see how they're going to book price before it happens. How many times have you seen me do videos where I'm recording live trades? I'm in there trading them, and I'm calling moves before they happen, and I got limit orders waiting on it, and they go right up to that thing, right to the pip, maybe 1 or 2 pipettes. Beyond it, then it turns. Or I'm in the recording and I'm saying, okay, it's going to do this, it's going to do that, it's going to do that. I'm doing what I'm going to show you right here. Okay? I'm doing it on whatever time frame, or I'm using a piece of a larger time frame, but using what I'm teaching you here. Okay? This one single candle creates a SIBI. This candle's low to this candle's high. This proportion of price action in here, that's what I'm highlighting. This candle up, or the up close candle, we extend that through. This low to this high, there's a SIBI right there. That's what I'm highlighting. I'm extending that through the curve. Same thing here. This candle's high, this candle's high. That's why if you watch, like if you have access, and I'm not going to make this available to anybody because I have too many things on my plate as it is, and to be honest, it's probably going to be more of a distraction, but the folks that have collected all of my old videos back when I was doing things for Baby Pips community, you'll see me drawing lines on candles, and sometimes it won't be on the last down close candle. It'll be on the up close candle. And that's why people that studied my concepts think that when they put the line on a candle like this, that's the order block. It's not. What I actually was doing was, and not teaching it, was this low to this high, again, is a SIBI. That range I'm extending through. This to this, while this is the order block, and yes, it does almost come down to the open on that candle, but it does definitely go into the wick, the consequent encroachment of the wick, and the open. Either one of those 3 levels is good. Which one do you trade? Whichever one your risk allows you to, and how many pips you want to use for your trading plan. See, that I'm giving you the freedom to determine what you're going to do. All of them are potentially good candidates, but based on the time of day, what the market's already doing, what's the structure at the time, it's all going to be a variable that you have to see price when it's doing it to determine what level you're going to use. And you're going to miss trades. Okay, you're going to miss them, and you just have to accept that. You know, I missed the short on cable this week. When we get into it, you'll see. And I didn't get any of this either. But my focus was on the stock market crash, and I'm more impressed with that than this run here on Euro. So we have the SIBIs are being extended through the curve. The up close candles, which are going to be bearish order blocks if we trade back up into it here on the sell side of the curve, but they become mitigation blocks on the buy side of the curve. The imbalances, because the nature of IPTA, when price drops down, it's only offered selling prices. Okay, so all these prices in between this candle's low and this candle's low have only been offered for a short period of time, and no real buy side has been offered. So it's imbalanced. It's allowed only price going lower. An efficient model of delivery would be, hey, let's come back up there and give these opportunities to offer buying and selling at that level. And it doesn't do that here. So that's what I'm doing. I'm carrying these over to the buy side of the curve, to the right of the lowest low. Okay, and you want to take a look at what these levels do for you on the lower time frames, and we'll start doing that now. So here's an hourly chart. Again, sell side of the curve, buy side of the curve, that line that delineates it, and this is our market maker buy model. These levels, again, you got to study this lesson a couple times, because where I'm drawing the lines from, it's going to be confusing. Just look at these as our traditional SIBI and BISI, okay, or fair value gap, and then extending them out in time, because IPTA will remember these levels. The shaded level, obviously, because we went to a lower time frame, it kind of like skews it, but you can see the up close candle in here basically is the bulk of that. Carry that out, and we're going to be looking for the same thing we would be looking for on another time frame. That would be, like, for instance, if we look for a higher time frame daily order block, we can go into that daily order block and trade down into a 5-minute chart and see structure that would be an optimal trade entry, a bullish fair value gap, a run on stops, sell stops, and then run higher. So anything in the shaded green area, which would be the bullish candle on the sell side of the curve on that daily chart before we drop down into a 60-minute chart like we have here, you're looking for bullish scenario, something bullish. Okay, that could be an order block to buy off of, fair value gap, or a swing low that's violated, and that's going to be a sell stop run. Anything that's the imbalance, okay, the SIBI we extend over here, we're going to be looking for that to be capitalizing a rebalance and return back to it, and then rallies up. Notice this imbalance, we carried all the way through to the other side of the curve. We wick through it a little bit. You already see what it's doing here, but this is the basis to it. Okay, why is price coming to this level? Because it created the imbalance on the daily chart over here. That's not Wyckoff. Okay, I'm not making things up. These are lessons that charter members and people that have been here for a while know that this is, I'm teaching this. Okay, these are things that are in this content. It's not anything like supply and demand or Wyckoff or any other nonsense thing out there. It's nothing like that. Watch when we drop down to a lower time frame, or not lower time frame, but a 60-minute chart zoomed in. Here's that up close candle, the lowest up close candle of the sell side of the curve on the daily chart. We have an imbalance here. Price comes down just to the bottom of that. Look where it's hitting it. Now, is that random? No. It's going below this low. It's rebalancing. Okay. Does it get down to the order block? No. It's going to the higher time frame daily low of the order block on the daily chart. There's your buy. It shows a displacement. Creates what? Another imbalance. This is a fair value gap in the form of a BISI. Here's our imbalance. The two lines coming out. Look at the buys of the candles. Yes, we wick below it because it goes into the imbalance that's created on the 60-minute chart. Below a swing low, sell side liquidity, rebalance, and remembering the buy side of the curve is matching with the sell side of the curve. That's what's happening. That's not Wyckoff. My boxes will match up with logic. The reaccumulation and redistribution stuff that these schematics have in Wyckoff, this is nonsense. Okay, it's contrived. It's all conjecture. It's only going to look good after it happens. Period. Remember, there has never been anyone ever on record, documented. There's a lot of people that go on YouTube and they make videos about whatever they're doing with their trades. You have never seen anyone do what you see me do with my trades. I'm like laser guided. And I have so many examples of it. And I've traded so many different markets. It hasn't been just Forex. I've done S&P. I've done bonds. Come on. It's real. Okay. And it's not Wyckoff. This right here, reaccumulation, price rallies higher, and inside of here, what you're going to look for is any kind of run down below a swing low, or a return back to an order block. Now this 2 down closed candles is an order block. You extend that out in time. We don't get that. That's fine. It doesn't have to give you a setup. But inside this shaded area, like in here, we would look for this type of scenario where we had an imbalance, an order block. It comes down, does that, and pops. It could have done a return back to the low, rebalanced in here, this fair value gap, and returned to the order block as well. That would have been something I would expected to see. It didn't do that. So be mindful that while these are areas you're looking for a setup or a continuation, or an area where it would create a buy and start to run, then you can trail your stop loss below that. Think. I'm giving you logic that Wyckoff's not doing. There's no trend lines on here. Okay, I'm not showing you this is what needs to happen. There's no volume here. And my boxes are not supply and demand. They're logic that are linked to the sell side of the curve that I'm projecting into the buy side of the curve. Because everything that has to take place as a distribution cycle has to be at some point in the future mitigated and or rebalanced in the future. Rewind that again because I just gave you gold. The other SIBI here, market comes above it. Look at the respect of that. Just this right here, enough. Okay, when I started seeing this in price, that's how I knew I was onto something. That's what it looks like when I was discovering all this. No one sat me down and said, okay, chapter 6, paragraph 4 of this book, this is what's going to talk. That doesn't exist. Okay, it does not exist. God opened my eyes to all this stuff. Okay, whether you're prepared to hear that or not, that's what happened. Okay, that's what happened, and there's no other explanation for it. None, because no one told me this is what the things that happen over and over and over again. I found them. Thousands and thousands and thousands and thousands of hours of poring over charts. I would eat and have charts in my hand. I'd fall asleep with charts in my hand. At work, I was looking at charts, watching data, watching price go up and down. I was a nut, okay? If anybody on the planet was ever going to figure this out, I was the perfect candidate because I did nothing and cared for nothing else but this. So this is the results of it. Price comes back down and sends it higher. All of this is evidence that completely neutralizes this whole bull crap that everything that I'm talking about when it comes to market maker buy and sell models is just pure and simply Wyckoff repackaged. It's absolutely not. Okay, it's not. Let's go back up to the daily for a second. Wyckoff starts talking about, okay, and then this is the reaccumulation phase. It doesn't talk about how it goes back above here to neutralize the initial consolidation and those that are short. It doesn't talk about that. It doesn't tell you how these areas of distribution correlate with the areas over here of reaccumulation. I do that. That's the distinguishing factors. By itself, that completely blows the whole narrative of anyone that has a case against me. Okay, and I'm going to tell you why they do these things. Because I have literally looked into these people that do this. Number one, their ass hurt because they can't do it. And they're just looking for some other excuse why I'm able to do it. And I have told people, these are things that along my development over the last 27 years, they were milestones. Now, I didn't actively study Wyckoff. I made a point of making fun of it on America Online. There was a guy out there that was promoting Wyckoff, and I was like, jump the creek, break the ice. Get out of here. I'm making $17,000 a week, and this guy's talking about nonsense cartoons. I was an arrogant person. I was really arrogant then. None of that stuff made any sense to me. But I had already adopted a mindset with what I'm showing you here. So when I saw that markup phase, I was like, there is something to what they're doing, but it's incomplete. It's absolutely incomplete. Now, when I had Larry Williams' video where he says, I want to know the people that buy on, the candles that go up, like when they buy down here, he said, I wish I knew the area code of those people. Maybe that would help, because he never understood that. He was always buying strength. So it has to go up a certain measure of points before he would be a buyer. And that to me made no sense. And especially when he said that his weakness, and I'm very thankful for it because it made me who I am today. I've always looked at things as a personal challenge because I've always made a case of finding significance in my own life. Okay? That's how I know all these haters better than they think I do, because I was that same person. I grew up without my father. I grew up with a mother that didn't care for me. I had grandparents that raised me, that showed me love and appreciation, and they encouraged me. When they passed away, I was shell-shocked, and they did not get to see me have success like this. So I am always in pursuit of finding significance. Okay, that's why I am very candid with all of you. I get re-energized when the new blood that comes into mentorship sends me their, and this is a key phrase here, short, very, very short emails, because I don't have the time to read all these novels that some of you send. And I'm not trying to make fun of it or discount it or say it's not appreciated. That's just, I don't have the time to go through them. But the folks that give me feedback, that encourages me. I'd rather get it in my email than on Twitter. I don't need people, glad handing me on Twitter. Like I said, I'm leaving it this year. So December 31st, I'm signing off, and it'll just be an invitation to get to me through the mentorship there. No tweets will be existing. My whole timeline. If you want my tweets, you need to start getting them now. Okay. And I'll remind everybody before I do it, but I'm going to wipe my Twitter, and it's just going to be the banner with, information to get to me. But I'm not going to be on Twitter anymore because it's a waste of time. But I'm energized by everyone in the mentorship, especially the new folks, because when they have this moment where they can see something they never saw before and they can really resonate with it, I know exactly what that moment is, and I get to relive it. And it's very emotional for me because I struggled very hard to learn all this stuff. And it's disgusting to see these pieces of shit all over the internet tossing my things around like it's worthless, like it cost me nothing. I don't give a shit about the money I lost or what it cost me to learn all these things. The heartache, the loss of relationships, the time. I can never get that stuff back. And these miserable pieces of shit that make light of everything I had to endure to go through all this stuff, and they're repackaging everything, trying to make a name for themselves, but none of them can't do it. None of them can do it. I'm going to start a campaign on my YouTube channel, and I'm going to be calling all these people out. And I'll probably lose my channel in the process, but I don't give a shit. But I'm going to be calling every one of them out. Everyone in this mentorship that's gone out there and tried to make a name for themselves and changed everything, titles and everything, to try to join IML, IM Academy, Trade House. All these people, I'm going to expose every single one of them. And I don't care if that is something that you want to be a part of or not be a part of. I'm doing it because I want to do it. But I am so disgusted that people would reach so low to try to discredit me. And these are the same people that say I'm teaching Wyckoff, but then they use my language, not Wyckoff language. If it's Wyckoff, why aren't you talking about jumping over a creek? Why aren't you talking about breaking the ice? Why aren't you talking about throwback? Because it's bullshit. Okay, that's why. None of that stuff works. And it's ambiguous. It's a breaker. It's a mitigation block. It's an order block. It's my stuff. Mine. For everybody out there that talks about it's Wyckoff, and you listen to them, they're using my terms, my language. I created this language because I had to create a language for my children to learn this. I didn't create this language to write books and make courses. I didn't do that. I created this language so that way my children can understand, because of concepts that have been explained conceptually and modularly, they'll put it together through the lessons. That's what this language is. It wasn't taught to me. I'm not rehashing Elliott Wave bullshit. I'm not looking at stuff that came from other books and saying this is what I'm teaching you. No. When I talk about specific things that I learned from other people, I always give credit. I've always done that. I have always done that. The thing with Larry Williams, when he said that he wished he knew how to buy the low on up close candles. That was a personal challenge to me. And most of you know that. I did not look at Wyckoff and say, let me figure out the gaps and figure that in. I had already done that. So that's why when I looked at it, I was like, oh yeah, it's good for people to get a general idea. But it's incomplete. It's incomplete. Much in the same vein, I said that supply and demand is a good starting point. I'd rather have someone start at supply and demand idea, okay, versus the concept of support and resistance, because the idea at least has some merit to it, but it's incomplete and it's flawed in many, many ways. Mine is not. They don't have information like I'm giving you here. I'm giving you narrative that Wyckoff is not available to, reach into its logic and say, okay, this is what it is. Supply and demand doesn't even consider this. It's not even factoring it. Has no concept of it. Same goofball. Breaker's nothing but an engulfing candle. Bullshit. You have no idea what you're talking about. No idea what you're talking about. I've read all the candlestick books, okay? I got about 300 of them, and they're all bullshit. Nonsense. The breaker is the logic, not the pattern. The candle itself has absolutely nothing to do with it. It's the things that are outside of the chart, Paul. Too many smartasses coming in here thinking they know something, and they're cheating themselves of real learning. And I'm getting to the point where I don't care if you ever get it. If you're pompous and you think you know something, good. Because that means my gifts you won't receive or retain. You'll ignore it when it's been shown to you. But you can't ignore this. Moving into that 15-minute time frame. There's really no significant movement in here except for the fair value gap right there. And you can see it rebalances that one single movement up. This candle's low, this candle's high, rebalances, and then you see it move. Inside of the bullish order block, or not bullish order block, but the bullish up close candle on the daily chart, that's what this level is, okay? Inside of that, this is what you're looking for. Fair value gap, or it could have went down below this low here. Which one would you look for, Michael? It depends on the time and depends on the structure. What do you have here? Equal highs. Is it likely to come back down here and take this low out first, then go up higher? No. This is the draw on liquidity. It's going to go to this side before it's going to go to this low here, because this is the least resistance. This one here, it's got a low, a higher low, and it's wanting to build up to go higher. Look, I mean, it's obvious. It wants to go higher. It's going to want to go to its least resistance. All of this looks like what? Retail resistance. But we see it, or at least I'm trying to convey that to all my students, that it's going to press on the other side of that and seek liquidity. Now, is it going to go above these equal highs and then crash down? No. Why? Because the underlying daily chart has changed, and we have now went beyond what would be reasonable with this run here. So now, as I mentioned in the Wednesday review, I wanted to see if price was able to keep price from going higher. It wasn't. It went higher here and then resumed higher. Look at the reactions in here. This is that SIBI. Look at that right there. You're gonna give me that. This is supply and demand, or this is support and resistance. This is voodoo. I mean, maybe you don't think this is a big deal, but when you see tens of thousands of examples of this on every asset class, on every time frame, this is not anything in any other theory, any other school of thought for trading. Okay, I've said this before. If retail stuff was real, okay, like trading crossovers and indicators, and why are there so many overbought and oversold indicators? Why are there? It should be just one. If price reacted off of that stuff, it would be reacting off of one constant overbought and oversold indicator. But retail seems to believe that they're going to, and I've done this. I've wasted years. In fact, I wasted like 4 of them. My first 4 years, I've wasted looking for settings on indicators and what pair of overbought and oversold indicators would be the best ones to pair up with. I spent more time worrying about indicators than if I just would have looked at the open, high, low, and close and figured it all out. When is the market choosing which indicator to follow? Which indicator's divergence, bullish or bearish, is the one that's working right now? Is it Elliott wave this week that it's following, or is it supply and demand, or is it the Guppy system? Okay, or is it order block theory, or is it wolf waves? You get what I'm saying? At some point, you have to draw everything back to common sense. Price doesn't give a shit about all that stuff. It doesn't work. It has no bearing on whether price goes up or down. 0. Price is going to do what price is going to do. Period. What I'm teaching you is to determine where are those orders. What is the narrative in the market right now? Where is it likely to go to? That's the expression, okay, that you're trying to work out. The solution is only going to come to you by experience and seeing enough of these things over and over again. That's the mentorship. Again, it's not those 8 lessons at the top each month. It's me talking to you just like this. Maybe not with such language, but I'm irritated and I'm letting my emotions show. And I can. And I don't care to hear from anybody an email about how I'm delivering today. You are learning the highest form of analysis that you'll ever see. And I'm going to say this, and yes, it is arrogant. They are going to write books about me. The things that you're learning, you're here. And they're going to learn about the group that you're a part of right now. They're going to read about that, and they're going to say, I wish I would have been under that guy. Long gone, I'm going to be out of the world by then. And they'll be writing books. And they'll be referring to you indirectly. I think that's kind of neat. Look at the reaction in here. It trades back down into the consequent encroachment of this BISI. Close proximity to the daily SIBI. And you have to blend these things together. So in my mind, when I'm watching price, and don't get me wrong, I'm not saying that I was even watching Euro because this entire week I was all over S&P and bonds, but S&P primarily. So when I'm looking at price, I'm looking at, okay, this is a level on the daily chart. If that's what I've framed the market maker buy model on. I'm looking at this level here and in close proximity. What is close proximity? Within 5 pips. I want to see something that would give me within 5 pips a overlapping convergence of an idea that would still support what I'm looking for. Well, without all this stuff even included, I've already trained you or trained your eye to look for this anyway. So your eye would have already naturally went right to that. That's mentorship. Me doing this every single week, 2 times a week. Again, those lessons are just a language. Everyone that thinks that they get all those lessons and they're trying to sell them or they're trying to share them or they're posting them on mega file things and I'm having them take them down, all that stuff is a waste of time. If they just took the effort in being a part of this community, listen to what I'm telling you. If you do that, you won't need to worry about doing these little Mickey Mouse operations. Okay? You can do very well on your own. But you have to submit to the process, and 90% of you people in here aren't willing to do that. because I haven't won the Robbins contest that I never really officially entered. Every year, Chelsea reaches out to me. You going to do it this year? You going to do it this year? She's the person who's in charge of Robbins contest. They would want nothing more than me joining, okay, because they'll be able to see my trades. And I've thought about that. And other excuses that other people make, okay? They spent more time trying to tear me down while all these other groups are building themselves up using what I teach. You don't see a logic behind that? Just like that goober in the UK. I can't remember his name now. Adam Webb. Mr. Market Maker from Goldman Sachs. Never had any intention of trading against me. Not one time. Only wanted to be able to dox me. Wanted my personal information so that way he can look it up and then show everybody my homes, my cars. He thinks I'm driving a Volkswagen, I'm sure. The point is this. If you're new here, you need to leave all that baggage at the door and go by what you're experiencing here. Believe me, if I was a fraud, you would have heard about it on Twitter from everybody that's here. If I ever lied and said I called this move and I didn't, or if it didn't pan out like I thought it would, you'd hear about it. It doesn't happen. And here, I'm genuine. I'm 100% me. I'm me. I'm me. I don't have to live up to any expectation. And if you ever want to quit, you can quit. You're not held to anything. Point is this. You can be distracted and never learn, or be a part of the community. It's simple. Just submit to it. It's going to take time, but you'll get it. How long will it take? I don't know exactly how long, but you'll get it. In passing, before we go into cable, I got my notes here. A lot of new folks are asking, what broker do I recommend? And I don't talk about brokers. And I don't ever tell anybody what broker I use. So I appreciate your questions, but I've always said that and remain constant with it. I do not give that information out. A lot of brokers want to get into relationships with me too, to operate much in the same way as a introducing broker. I don't do that. I know there's brokers in here, and you know that's been the case with you too. So moving on into a 15-minute time frame with a different perspective. This is what you are used to seeing, but with something new. This is something totally new. Again, this is a charter member lesson that I had intended, but I'm giving it to you all so that way you can see there is not an end, or has not ended, in terms of what I've taught. I had a couple members I saw on social media talking, yeah, it's just, nothing new. It's the same old stuff, blah, blah, blah. And again, these people have no idea. So anyway, if we look at the euro dollar, based on the ideas that I've already outlined here, we anticipate possibly seeing the original consolidation, or that green box on the daily chart, before we drop down. So just rewind the video and you'll see what I'm referring to. The expectation is that euro dollar can go above that and clear out the buy side liquidity. Now, it doesn't mean it will, but that's the general idea. Now, if it doesn't, it will at least go up to the bottom of it. And that's the level of the original consolidation support. That's where it should reach up to as a minimum. Then, at that point, you should be 80% out of your trades, and then you wait to see if it wants to go above the original consolidation. That's how you work with that fractal of mine. Wyckoff doesn't teach that, okay? But this high that formed on the 27th is a short-term high ahead of meeting those objectives. So when price breaks down, you're used to me showing you this. Now remember, this is the same portion of price action here. The only thing it's done is I've changed the annotations. See? I'm just toggling back and forth between the two slides. This is the perspective I have in mind when I'm watching price that you don't know about and I have not shown anyone. This is what I'm drawing your understanding in, because that's the natural progression of how I learned all of this. That's how I teach this mentorship. I have literally gone through my journals and compiled the timeline of what I learned and in what order And I'm putting you all through that same thing. Now, maybe that's not what you want to do, but I don't care. That's what I'm going to do. That's what I promised I was going to do. And the timeline is as long as it's going to take for you to get it. But the content that I have intended to teach, which would be the lessons that would comprise and act as bookends, the beginning and the end of the ICT mentorship teachings, the application will be there, as long as the Lord gives me strength to do it. That will always be here. But the actual lessons that here's a new lesson, and this is a new lesson on this, and all that stuff stops December 31st, 2022. Okay, so that kind of, I'm putting that there multiple times. So I want people to understand that I'm not dragging you on for 25 years, and it's always something new. It's always going to be something new. No, there's a schedule I'm on, and it ends then. Okay, it doesn't mean I'm closing the mentorship. It doesn't mean that you don't get anything else from me. It just means that unless I'm seeing it live in the chart and talking about it, there's nothing new coming out. Okay, because you will all have what I had intended to teach you. But you're used to seeing things like this: sell stop, liquidity pool, fair value gap, price trades down to it. Okay, you're used to seeing that. That's a normal. What's new is the high here is a short-term false high. It's going to be pricing in and luring in and enticing short sellers. When price runs to this level, what you want to do is you want to look for the fair value gap that exists here, because that's going to be an imbalance. Extend it through time. Okay, look at you end up right here. This is a pseudo breaker trading into this. Everyone's familiar with my pattern now. Relative equal highs. Market runs up, breaks down, breaks the low, and it's going to be a breaker. Sell short here. Whoops, what happened? Narrative. The narrative is that daily chart, that market maker buy model, not Wyckoff accumulation phase. It's not that. Okay. What you want to do is you want to take this, extend it through, and you'll get this. So you're going to wait for it to come back above and then down into it again. And it's all based on this imbalance. Now, where's that in any book? It's not supply and demand. It's not Wyckoff. It's not anything else. It's nothing else. Now you're going to say, oh, this is just, you just made this up. Nope. If you take the small little fair value gap that's in here and extend it out in time too, you actually get the very lows of these candles here. The breaker, when it's not a real breaker and it's a pseudo breaker, you use the fair value gap inside of the breaker. It'll act as support. They'll reaccumulate and rebalance there and go. IPTA is remembering specific points in this price action right here. It's remembering this low, this high, this imbalance. This high here, it doesn't care about, because this one it's anchored to. This is all time and price linked. It cares about this new high here and this low. Price runs, clears the liquidity on this high. I extend the lines always to more or less complete all of the equal highs, but it's this one that it remembers. Price runs above it. Now it remembers this high here, and it's remembering this low and this low. Price seeks the liquidity here. Boom, rebalances the imbalance here. Breaker to reach the sell side liquidity here. So the breaker only does its job there. When it comes back up here, anybody that doesn't see this on the lower time frame, 15-minute time frame, they're going to look at this as, okay, it's going to sell off again because this is the breaker. This is that engulfing candle, Paul. Wrong. We expect it to trade through it, come back down in, then buy it. Boom, then takes off. Okay? So that's logic. That's a pseudo breaker. What makes it a pseudo breaker? In case you missed it, the daily chart is calling for this to go higher. So it's going to go up to the low of the original consolidation, or that green box I have on the daily chart of euro-dollar in this video. And if it continues through that, it'll trade to the upper end or above the original consolidation. So this high doesn't fulfill any of that. So this is just it's a trap. And basically that's I'm bringing in something new, but that's a pseudo breaker. If you go into a more zoomed in view, again, this is another version of it, what I just mentioned. This is a 15-minute time frame. This is a pseudo breaker. That fair value gap in here, just like this one over here, extend that out in through time. Boom. Again, just because I've mentioned it and haven't talked about it anymore doesn't mean I'm exhausted in terms of what I'm referring to. Fair value gaps, you have no idea where I'm taking you with them. Like, these are the dots that you connect. And when you see them connected, you get the real narrative of what's actually going on. And all these candlesticks, the wicks, the tails, all that business, these harmonic patterns, these animal zoo patterns, it's all stupid stuff. It's distractions. And you see these really genuine people striving to make this stuff work. And when it sometimes works, they go over, head over heels thinking they figured it out. And any other time, it's just because it's random price action. It's nothing random about this, folks. It's absolutely nothing random. The sell stop liquidity pool here, the BISI, buy side imbalance, sell side inefficiency, consequent encroachment, bam. Takes the liquidity, consequent encroachment. You'll learn about that if you're new. Runs above it. Perfect respect of the fair value gap inside of a pseudo breaker. And there's your run. I mentioned, remember this time when we talked about the dollar index. Remember the little eyeball on the chart when I said when we go into the other currencies, that sell-off in the dollar is going to promote bullish, keyword bullish. This is a bullish pair. It's showing relative strength on the upside. And that's when this is going to work perfectly and then pop. Okay. So a pseudo breaker provides no opportunity for shorting, rebalances, cut through all of this. You can't do that with supply and demand. You got to use fresh zones. We don't talk about zones. Specific low, specific high, imbalance in between, projected in time. Bam. There's nothing over here with these levels that you can say, oh, it's supporting. It's finding support because of what? What is it doing? What's it doing? Maybe it's this high here. Really? Sometimes it's not going to do that, but it's always going to do this. It's always going to do that, because that's how the algorithm remembers price. It doesn't remember the bat pattern. It doesn't remember the Gartley pattern. It doesn't remember a conjectured supply or demand zone. It doesn't. These things, it does. And they're mine. Cable finally made its way below our relative equal lows and our low here. So these lines, all I did was dim them. They're no longer active. So we did sweep below that. And unless proven otherwise, I still think that we're going to try to get down here. I think that'll happen before this high is taken out. So if we're going to put me in an arm wrestling match, this gets hit before that. Will I be wrong? We'll see. But I think this is more likely to hit before this. British pound on the 60-minute time frame. Here are bearish boundaries, high and low. This high here, buy side liquidity resting above. They take it out here, and then we break lower. So there's a displacement. I goes right to that. There's our SIBI. I mentioned in the midweek review on Wednesday in the chart that I want to see if it can get up in here, because I'll take a short if it trades up into the SIBI. What I was wanting specifically is to see it touch the top end of that bearish breaker and get above this here. Got real close to it, so it was a missed opportunity. Michael, you never show your losses. Michael, you never show when you miss a trade. When I do, I show it. But if it's not there, I can't talk about it. Here's an opportunity where I missed it. Was I right in the idea that it was going to go lower? Yes. Did it go to 128.50? Yes. Did it take out both of our sell side liquidity pools on the daily chart? Yes. Was the direction right? Yes. Did it give me my setup? No. So I missed it. There's nothing wrong. I called the crash in the market. I'm good. Yeah. All right. So anyway, we have a bullish candle here, which is a bearish order block displacement. So we have bearish order block. and price running up back into the bearish order block here, and then consolidates during the afternoon time in Asia. And then in London, we pop up, mean threshold of the bearish breaker, which is this high to the low, divide that in half. That's what it's returning to, and reclaimed bearish order block. Buy side liquidity resting here. It takes that out, runs lower aggressively, and clears the daily sell side liquidity pool. On a 15-minute time frame, you can see that again. I missed it, didn't get quite up high enough. Nothing in here that I'm able to say, oh, it did this, it did that. It didn't do it. And like I've mentioned for months now, cable has been doing its own thing, and it tends to do that. So, when it's hot, it's really, really hot, and when it's not, it's not. So, bearish order block here on a 15-minute time frame too. You can look at the open on that candle. That would have been a nice level by itself, even if you didn't have all the things I'm giving you here. Equal highs, bearish scenario. This is a stage that this is going to get rated, and this high maybe as well. Price runs, but look what it does initially. Okay, here's the new day. It drops down, takes the sell side liquidity out, and puts traders what? Short. Where's their stop loss going to be? Right above this high. Anyone that is short, they see this as equal highs and resistance. They're going to put their stop loss there. The lowest volume of stops is here. The highest volume of stops is here. Price gets people short, engineers liquidity. Now, the book is heavily short. So what is the bank going to allow to happen? The algorithm is going to reprice higher. It's not they bought more and drove price up. The algorithm runs above this high and here to offer liquidity or the opportunity for traders that know what they're looking for, which is what I'm teaching you, to get short there, to pair their order with selling short at willing buyers above this high and above these highs. Price breaks down. New York setup. Bumps the breaker. Remember, top of the breaker, low of the breaker on the 60-minute time frame chart. I showed you the boundaries of it. Price breaks down, hits that first equal level of lows that we've been looking for, and then gaps down, comes right back up. Look where it goes to. Here's the gap. It's a real gap, but it goes right to the middle of the gap. That's consequent encroachment. That's how I arrived at that theory of mid-gap. It's consequent to price retracing, and it encroaches on a complete closure of the gap. That's where consequent encroachment's name came from. That's my label, that's my title, and the language. Okay, that's my language. Mid-gap is enough. And I discovered this actually on S&P trading, the futures contract back in the 90s. So that's where this whole idea came from. In Forex, you don't generally see a lot of gaps. There's usually a continuity that's pretty seamless, and this is a gap because it's a SIBI. It just means that because there's no time gaps, like no gap between stopping and opening up again, unless it's the weekend, all of our candles are continuously attached. There's really no space. And here we can actually see a space. Doesn't quite get to a level of any real significance that I can outline here. It just runs the liquidity on those daily lows. Aussie dollar. I give you guys a Twitter study. Posted a chart. This is what it looked like. And I had buy side liquidity up here. Right? And I knew right away what was going to happen. Everybody's going to say it's going to run the equal highs because everyone sees that. They're used to it. And the question is this. At this moment, where is price? From this high and this low, in that range, is it at a discount or is it a premium? It's at a premium. It's above the high and the low. Split that in half. It's at or above. That means it's more likely to go down if it's at a setup that would promote going lower. Here, we would never buy this. We're not buying here. It's too extended. So what am I trying to draw your attention to? from this high to this low. 50% is here. Where are we at? We're at a premium. Dealing range high, dealing range low, premium. Dealing range high, dealing range low, premium. I drew the attention at these equal highs, but it's the relative equal lows where the liquidity is at. SIBI, high, and the low of those candles respectively, extended out in time. We rebalance. Okay, we rebalance and we create a bearish order block. We break down, consolidate, trade back to the top of the SIBI, move lower, come back up again. Mean threshold of the bearish order block, and back into consequent encroachment of the SIBI. Sell short, sell side liquidity is your target. Mean threshold, consequent encroachment, overlap. Consequent encroachment is gap based. Mean threshold is order block based. Two different things, same general consensus about midpoint. Okay, but threshold is always attached to a specific candle. Consequent encroachment is a gap, either on a wick or a imbalance. Okay, so for your notes, price trades up, hits it, breaks lower, sell side liquidity, gone, retrades back to it, bullish candle, which is bearish order block. It doesn't really give you a chance to get up and do anything with that. Displacement creates a SIBI, runs the sell side liquidity here, comes right back to it again. This is where your natural support resistance ideas will work, and they'll put them in their books. It has to have the imbalance. Price trades up into it, gives you the institutional order flow entry drill. And this whole business is framed on the imbalance here and the fact that we're at a premium, not a discount. So you can't buy in this scenario. Our SIBI, it trades up into consequent encroachment of that. Institutional order flow entry drill. That means the high of the candle that creates the opposite end of a SIBI. In other words, the candle immediately after that one single candle that passes down in a range that no overlapping candle price touches. So this candle's low, this candle's high, this singular candle, that little movement of price action right in here, that's what I'm trying to teach you and train your eye to spot. Okay? That is where your targets will be. That is where your entries will be. This will be the basis of when you can trail your stop. All those types of things are framed on this very thing right there. You're looking for the one thing in trading, it's this one thing right here. Either a down candle doing it or an up candle doing it. But this candle's high is the framework of, as soon as it trades to that level, you can be a seller. Ideally, we want to be above it, but it can trade all the way up and fill the gap. But I'm not teaching Chris Laurie's liquidity voids. That would be running up and filling a liquidity void. That's not what this is. This is a SIBI, sell side imbalance, buy side inefficiency. We don't require them to fill. We want them not to fill, actually, which makes them a breakaway gap. So, I'm sorry, this would be a measuring gap. This is a breakaway gap. So breakaway gap, measuring gap, common gap, and an exhaustion gap is in the wicks. Okay, so institutional order flow entry drill touches the top of that candle here at that price or higher, you can sell short. Below this low, first objective, and then you do your standard 10, 20, 30 pips, projection lower. We trade to a 65 big figure. So if we looked at this level here, 20 pips alone gives us below 65 big figure. The protocol for big figures is if we can get to that level, it can go 40 pips below that. So normally we would look for like 10, 20, 30 pips. Big figure moves can take it all the way down to 40 pips. And you can see here, it just went even below, farther than that. And kill zone related, you can see this occurred in the London Open kill zone and in New York kill zone, buy side liquidity, stop run, imbalance, fair value gap, distribution. Your homework is to look at this pair. Okay, what you want to do is you want to compare the price action of Aussie dollar versus all the other dollar crosses. That means New Zealand dollar, dollar CAD, dollar Swiss, dollar yen, euro dollar, GBP dollar, or cable. Okay, and what you're going to be doing is you're going to be looking at the highs. Now, the pairs that start with dollar first, you're going to be looking at the lows, not the highs, because it's inverted. Okay, and if I confused you, just stick to the ones that like euro dollar, cable, which is British pound versus USD, and New Zealand dollar. Look at those pairs versus the Aussie dollar. Okay, you're going to compare the highs on the hourly and the 15-minute time frames, and I'll post what you should see. Do not tweet them to me. Do not send them an email. Okay, your homework is for you to have in your study journal, and then I either provide something later on in the mentorship that supplies the solution for that, or as I'm telling you here, I'm giving you the actual day, and the location will be on the form. I'll tweet the actual link on probably like 5 o'clock on Monday at 5 o'clock my local time. I'll post a chart and I'll show you what it is that you should be seeing. But your homework is to compare the Aussie dollar's highs versus the other dollar crosses. Okay, and look at the charts and study. I'm not expecting you all to know what I'm going to show you, but if I talk anymore, it's going to steal the thunder from the lesson that I'm going to give you on Wednesday. Okay, moving on over into bonds to wrap this one up. We've basically almost had a $10,000 per contract price movement, all stemming from back in here on the 19th. I outlined the actual unfolding of the tops in the stock market forming. The bond market, if you remember, for those that have been here for a while, I said we would start seeing real volatility in the markets when the bond market leaves its consolidation, and it started showing accumulation. And I told everyone that bonds were going to be going up, and bonds and stocks are inversely related. So in other words, if bond prices go up, the yield goes down, which means there's going to be a flight to quality or safety in this case, not so much quality, but they will be fearful in the stock market, and they were already showing signs of that in the beginning of the year in the bond market. And I've been monitoring that. And that's why I've been telling everybody, if you have exposure in stocks, think about hedging that, because this has got all kinds of things. And I said, I'm not trying to time the market. I'm not trying to call a top yet. But I also said in this mentorship, I will know it when it's there. And I walked everybody through it in this mentorship. You don't believe me? Go back through the videos the last couple weeks, and you'll see me doing that very thing. Okay, I'm showing you the elements and the signatures that create the tops in the marketplace, just like I'll do it in the low this fall. So in here, this is the signature that we're looking for the bond market, and it signals a buy. In here, we have a fair value gap, extend that in time, boom, hits the top of that as well. Fair value gap, rebalance, bullish order block, mean threshold. That means all of these down close candles, find the midpoint, extend it out in time, bang, hits that. Order block, support, rally, and again, almost $10,000 per contract. If you go prior to the 19th, go closer into January, it's gone over $10,000 per contract. But in fairness, I really drew your attention to it. Leading up to this day here, we were already noting that there was some divergence occurring between bonds and S&P. And S&P, we have our breaker, but we're using the gap, which is the tail. Okay, and I know that's probably confusing to new people, but trust me, it's explained. Go through your lessons and take good notes. Also, let me say this: if you're new and you're getting ready to roll over to month 2, when you go into the forum and you click on month 1 content thread, it pops up with 2 choices. Okay, it gives you month 2 instructions or payment instructions, whatever. Click on that, and it gives you the actual payment note that you're supposed to be including. Some of you that are rolling over into month 2 are just sending me the initial payment note. You read the agreed to the terms, and you're just saying payment 2 of 12, and that's it. No, you have to have the note that's in the explanation of what you're supposed to be doing for month 2 content. When you pay, that note has to be exactly what it says there. Okay, and again, it does this for every single month. So every time you go into payment season, when you're going to pay to go into the next new month, whatever your current month, most recent month's content is, whenever you click on that month's thread in the forum, as soon as you click on it, it's going to give you the link to take you to the content for that month, and then or the instructions for the next month. That payment note is always going to be there, and it has to be cut and paste in your payment. If it's not attached, my staff is going to refund your payment and tell you got to pay $10 more for administration fees for not listening. So just want to toss that out there. But when you go through the, and it was probably a weird place to put that, but I just saw my notes and I remembered I hadn't said it in the beginning of the video. So this tail on this candle is also a gap. Okay, because it gapped down to this level here and then came back up here. That's my definition of a gap inside of the candle, one single candle. It's always going to be the tail or a wick. Now we use the low to the body, and then whatever that range is that makes that tail or wick, we divide it in half, and that is consequent encroachment too. Okay, price, take that out in time, extend it, boom, consequent encroachment. Retrades back to the bottom end of that, trades into a little bit, but specifically consequent encroachment. There's nothing in this high that you're going to be able to tell me that it is support and resistance. It's not. I'm telling you what price is reading, what the algorithm is remembering and going back to as an array. In a computer program, the data that you provide the program to do its calculations, okay, this data has to be stored somewhere. And the way the algorithm finds that information in price, it's the open, high, low, and close. And when there is a disparity between the body and the length of a wick or a tail, the algorithm is going to more or less ignore the body or what the body did, whether it be up or down. And it's only going to refer to this wick or tail here. And it's going to remember the low, the midpoint of that, and up to the body. It doesn't care about the size of the specific candle body. Not the body, I'm sorry, but the entire candle. It's referring specifically to what's more obvious of a characteristic on this one single candle here. Is it the fact that it's a down close candle? Or is it that it's a small bodied candle? It's the smaller bodied candle. Now, is it the small body that's important, or is it the long tail? It's the long tail, because this is the more prominent characteristic of the candle, and the narrative is it's part of this candle and this candle. So all of this movement down here is the breaker that clears this liquidity. So in this area here, we are looking at 3 specific price levels. Which one do we look at, Michael? Well, inside of this tail or gap, we have an up close candle here. Okay, that one up close candle acts as a what? Bearish order block. So the body of that candle is basically the middle. Okay, so the mean threshold or the middle of this up close candle, which is a bearish order block, overlaps with the consequent encroachment or midpoint of this candle's tail. I just gave you algorithmic principles and theory. Again, that's charter member stuff. They have not learned that until just now with you all. This is the level to choose. If you're excited about not, if you think you're going to miss the move and you're excited and you don't want to miss the move, you would just use the low. But you would aim for the ideal position. Entry would be the midpoint. You may not get it. Your broker may not offer it to you. You may just never get that fill. It could be something between the middle and the low and maybe midpoint of that. And that would be your actual entry that you're targeting. So you can kind of finesse your entry there. But nonetheless, you can see the logic being applied here. And I want you to go through your charts and study. Look for that. look for this signature here, and you're going to be surprised how often it forms. But it's never in anybody's books. Nobody's talking about it. Nobody does it because it's mine. Okay, no one has been shown this until now. I'm talking about it, and I know it sounds disgusting to some of you. You're like, oh, shut up, and you just constantly. But I'm reiterating because you don't see the emails that come to me. Okay, the folks that are rolling their eyes saying, oh, this guy's full of himself. No, I'm answering, emphatically that I'm not copying other people's stuff. I'm not rehashing or reinventing things. This is my stuff, okay? This was revealed to me, not by other people, but through hardship, okay? It was hardship that brought me to these things. Now, I believe that I was blessed with this. Whether you subscribe to that view or not, I don't care. This is my testimony, okay? This is what I live on. And I know it works. And it's transferable. I can teach it to other people. And that's what I'm doing. So, it's not always arrogance. It's just answering. So, here is the S&P returning back to this breaker. An opportunity to go short again and runs lower. Now, we're refilling this imbalance here. I like the fact that if we don't get any news on COVID-19 or coronavirus this weekend, it could pop up here and blow out this level again, trade into here, and maybe get as far as reaching above here. That would be a signal for people thinking, okay, it was done, and then it'll just do, a slower, I guess, erosion if it's ultimately going to go lower into August, which would be classic of the stock market. And it's a presidential year too. There's so many things that's going to push this market around this year. I said it's going to be a lot of volatility. The fact that bonds have moved really nice has opened the door for that volatility now. All right, so in a snapshot, this is what you have. Now you have the stock market crash of 2020. And as we were making higher highs in here, and this whole element of coronavirus, most stocks were actually making higher highs. It was just the indice just barely taking out the previous high. That, without going into more detail, because I don't want to give too many chart things, this is enough to warrant a high in the marketplace. Seasonally, in February, it creates a short-term high anyway. Generally, it's like the end of the first week into the second week of February. It makes a significant or tradable high in stocks. And even with this really impressive bullish stock market we've had over the last years, it still fell victim to this signature and characteristic. And I believe that this is all attributed to coronavirus. And the narrative is this: if this shuts our country down, even the smallest of degree, the sentiment about that is going to scare people so bad that they're not going to go to concerts. They're not going to go to NASCAR. They're not going to go to ball games, football games, baseball games, tennis. They're not watching soccer. They're not going to swimming pools. They're not going to the beach. They're not spending money. Think about what happened in 9/11, okay? 9/11 happened. George Bush gets out there on the rubble and says, get out there and spend. Don't be afraid to spend. Why did he do that? He wasn't looking out for your well-being, because they still put that yellow risk, of terror attack. They always kept the control factor over you. Every day, we elevated our level to orange today. What happened? Nobody knows, but it's orange. Oh, okay, our terror threat has dropped down to a yellow. Okay, well, I guess I can go have my picnic now. And the evening news, we've raised our terror threat to orange again. What is that? That's mind control. That's programming, okay? Maybe this is all done now. Maybe they've done enough. And now, before the real threat of, the country in America losing their mind, they'll come out with a narrative this week that, They figured it out. It's cured or whatever. The narrative is it's contained, and we don't have that same risk in America anymore. And then everything can be normal again. But if they keep this thing going and they scare people enough, they'll collapse our economy. And I'll say it again. If they keep it going, or if it really is going to happen here in America, it is going to collapse our economy. Our dollar will collapse. The stocks will collapse. And we're going to have real problems here. Biblical. Will it happen? I don't know that. I'm watching just like you are. The only thing I promised was I would call the top and before the crash would come. You got that. How many people are going to get sick? I don't know. I hope and pray that nobody does. My wife, she's not a real big hand washer like I am. I'm like a germphobe. I'm worse than Howie Mandel. If we had a meet and greet, you would never shake my hand. I would not have it. Okay, nobody ever shakes my hand. I just don't do it. And I have a little one still, my youngest. And when you're a little boy, you're not thinking anything. You grab a worm and mess around with everything outside, pick it up, and then grab your sandwich and start eating it without washing your hands. You can think nothing of it. And those two people in my family, I worry more about, because if we are unfortunate enough to get sick, and I pray in Jesus' name that I'm not, or we aren't, it's going to be probably because of them, coming in the house with something. And I don't want nothing like that to happen to any of you. Not because I want you to keep paying, because I care about you. And I think you can relate to that, because the way I talk to you, I'm talking to you like you're in a room with me, like I've known you for so long. And I don't have a face. I don't have anyone in particular when I'm talking to you like this. When I'm not speaking to you in the manner I'm doing right now, I'm usually envisioning my sons. Okay, I'm thinking along the lines. If I'm talking something with a feminine perspective, I'm thinking of my daughter. That's who I'm thinking of when I'm speaking. But as it relates to where we go from here, maybe if we go a little bit lower and doesn't really completely break down, I do think that August low is within striking distance. Now, do they take the low of August out and then come out with a we've contained it narrative? Maybe. I don't know. But that's what's in my mind. That's what I'm thinking. Does it need to come all the way back up into the 32, rebalance the fair value gap, consequent encroachment, and then come back up to this low and then find another horror story and then completely break down? That's another scenario I'm watching too. I don't feel confident of selling short rate when we start the new week unless something terrible comes out. Like now, I've been talking to you for a while now, and I don't know what the news wires are doing. I don't know what's going to happen when I go to sleep tonight and what's going to happen tomorrow. But I'm monitoring that. And whatever they tell us is going to create ripples in the market because everybody's watching. Everyone that wasn't watching is watching now. CDC's come out and said, look, we're at that critical moment. They haven't used the word pandemic yet. That's the one. When they say that word, there's no limit to where the stocks are going down. When that word comes out, pandemic, forget it. It's over. Like it's going to be it's going to be bad. Like they're going to stop trading. Like they're going to turn the markets off like they did at 9/11 and they're just going to let things cool down. What happens when somebody falls out on the stock market floor at the MISE? You ever considered that? Say the CNBC, they show the guys down there at the booths and they're talking and saying, oh, yeah, this is what's going to happen, blah, blah. Everybody's got their opinion. And then somebody falls dead on the floor. God forbid. I'm not saying that, that's entertainment or wishing it to happen, but imagine that and the shell shock of that when it's in your face. Because these are people walking around. They're not immune to this stuff if it's a virus. what happens? What message is that going to send? These are all things that I'm watching for. And how they contain or not find a solution to containing it this week and next, that sets the tone for the rest of this year. Because in the next 2 weeks, whoever's gotten exposed to this is going to start showing it. And we've already seen by reports that there's been a few individuals that have come down with what they said is corona, but have not traveled to China or met anyone from China. So that means it's been person-to-person transmission. And that's personally my concern. Japan's closed their schools down until April. And what do you think happens if they have to do that here? What happens when people have to stay home for a quarantine? Will employers be forced to just suck it up? And what happens if they're critical, like efficient staff members of whatever they're doing? No, that's the things that I'm concerned about. And there could be real breakdowns in our country because of that. So, and I hate to leave you on a low note like that, but these are all the things I'm thinking. And I'm trying to answer most of the questions I've got, because I got a lot of questions from people saying, what do you think about this and what do you think about that? What I've just said to you is the extent of what I have on my mind right now. And I'm not shuttered up in my home. I'm going to go out when I'm done with this, and I'm probably going to go to Panera Bread and grab me a soup and try to relax and keep my mind off of it, and then come back and do the charter membership video. And then after I'm done that and it's uploaded, then I'll go into the news wires and see if anything's happening. But prior to that, I'm going to kind of like keep myself from looking at it. And I think that's going to be it. So regardless of what happens, I still think that everyone should get some extra food and supplies. I think it's not a waste, because you're going to use it anyway. And it just means you ain't got to pick up the next time when you go to the grocery store. You have it. So I'll talk to you by way of the charter membership. If you're a charter member, you'll be hearing from me later tonight in another video. The rest of you folks, I'm sure you'll be seeing me tweet something, if not tonight, tomorrow or Monday. Be safe. Really just be careful and keep your hands clean.